And good evening. This is the Elliott Wave update for the NASDAQ 100 for Sunday, May 1st, 2022. Great day on Friday. For those that were trading, hopefully you all had a really great trading day. There were plenty of setups. There were some really great setups. There was a lot of follow through. And once expiration was set into motion with more fervor, the markets declined as expected, in line with what I had presented on Thursday evening. The markets did decline and pretty much finished on the lows. After hours, saw some buying as all that squaring took place. From now, they could figure out what their deltas were and where they needed to be long or to be short, to buy or sell. So coming into today, the markets have opened higher, not to be totally unexpected, and pretty much in line with what one would expect in terms of just normal market movement with the selling that we saw on Friday. So again, just to kind of recap last week, we had quite a few of the major titans of NASDAQ, of tech, report last week. Apple, Amazon, Facebook, Google, Microsoft all reported, and Tesla all reported last week. And actually, Tesla was a week before, excuse me. And so Amazon actually reported a loss. And this is after they had really spent the entire session on Thursday buying the stock up, along with buying Apple. And then, of course, that overflows, and they were just buying everything under the sun. Everything kind of went up. Now, that in and of itself was a setup. Amazon actually, I don't think that, not even I was expecting a report of a loss. I did think that their earnings may come in under estimates, but not at a loss. And that produced an immediate sell-off in the stock, and that eventually gained traction and ended on Friday with Amazon being down just over 400 points. That's a major move in a stock that fits what's happening in the markets now, what's happening in the economy. Their forward guidance was very interesting, and because I think it's very realistic as to what they're now going to be confronting. And also coming out last week, of course, we all know because Facebook came out, they did well. Then Mark Zuckerberg came out and gave a really good cheerleading forward guidance for Metaverse and Facebook. And that stuck. Everyone starts to believe him. And I would like to probably have a one-on-one where I could just ask him, how do you expect to get around inflation? How do you expect to get around higher interest rates and then have everybody buying your Metaverse products, or just, increasing your revenue through Facebook? In any case, the market in Facebook did remain above $200, even though it really got pushed higher and then pushed lower back towards 200 into that close for expiration. I believe a lot of that move had to do with expiration, but we'll see as things begin to unfold now. Apple, on the other hand, did beat estimates. Now, again, not by much, but it beat estimates. And that initially sent the stock up to $170. It pulled back to about 166, and that's where it closed on Thursday coming into Friday. On Friday, they decided to buy it up again, and then that marked the session high, not only for Apple, but also for the NASDAQ itself. And then we just started to tumble. Because the one thing that I found very interesting that Apple had said during their conference call after earnings was that they were no longer going to be reporting for or giving forward guidance on the stock price. And so that I found extremely interesting. And when they made that announcement, the stock immediately dropped $10. And this is like during the conference call on Thursday. The stock just dropped $10 right off the bat. And I remember pulling that news story down and bringing it to everyone's attention as it was happening, because I found it to be just extremely interesting. The fact that the stock slid back down through all of those strikes on Friday, the 165, the 162 and a half, all of them, they just dropped. And so, as I have always discussed, on our expirations, when we're in such a volatile period with the markets, they will tend to blow through strike prices rather quickly. And that really forces traders to adjust, traders to make adjustment to gamma, to delta, to theta, everything that takes place on that expiration as you move above and below strike prices. And that is basically what happened. Now, so starting again on the daily, which is where I begin now, there are still no changes to make. What I have done, and it's more on for the hourly chart, but it includes also the daily, is that I did put the top of minute wave 2 into place, and which signals that A, that corrective phase is over. B, we're starting to head lower in that minute third wave, which is also minute 3 of minor 3 of intermediate 3. So again, we're now approaching that same thing that I've discussed over and over, but we're going to give the market the opportunity to actually back us up on it instead of just extending a internal decline like a wave 1 or other waves before it gets to the wave 3. I actually, while it can continue to extend, in other words, here we have minor 1 and minor 2, minute 1 and minute 2. We could come into a sub-level, as we did, I thought, here. But I'm just going to hang tight and not necessarily do that, because what ends up happening is the previous one extends a little bit lower. So that still might be the case. And here's the reason why. I am expecting a very strong decline to continue. We started this intermediate third wave at 15,268. The low thus far is 12,801. So we're already really into a strong decline. But as I count out the subdivisions, it lets you have a little bit cleaner, maybe idea, or not necessarily cleaner, but just a little bit bigger idea that I am looking for a major third wave down. Granted, it's on the intermediate degree, but this is the longest and the strongest section of this larger A wave down on a primary degree. So again, remember, we are and continue to be in building block mode, but we're now building and putting into place the beginning stages of a long-term 10 to 12 years corrective phase. Now, within that corrective phase, do not get me wrong, we're going to have an A wave down on a primary degree, and then we're going to have a B wave rally on a primary degree. That B wave rally promises to be kick butt, promises to have strong upside, promises to deliver that we are out of the woods, all of the wrong messages, because it's just the way the human emotions will react. Again, Elliott wave doesn't know anything about the economy, does not portend to speak anything about the economy, is how I should say, or earnings or anything. It just gives us the possibilities through a wave count. So we see what the potential could be. And as I have discussed previously and continue to discuss moving forward, I could not tell you what's going to bring the market to its knees and down in this intermediate third wave. Again, as we started it, we were moving into the earnings season. And within that earnings season, we have had a record over the past year or so, since the March 2020 low, actually. So for the last 2 years, of all of these tech titans blowing the doors off of their earnings, just providing rally after rally after rally. And so now we're into that first quarter, and it's the same idea. Oh, nothing's changed. And so the emotion, the human emotion, when in that, buy it. We're going up. Everything's okay. When the opposing forces were basically saying, no, they're not. We're going to have higher interest rates. Inflation is on the increase. We are now getting signals that we may likely drop into a recession. So again, every time the buyers step in, it does nothing more as the trend is down than to give us perfect setups to go ahead and sell it. Perfect setups to sell it and to actually just participate in this downside slide. Because again, our Elliott is telling us we're going down, and it tells us what wave degrees we're going to go down in. We are now in a minute wave 3, which is a part of the minor wave 3, which is a part of the intermediate wave 3. So we're just on this section. So again, I'm going to go back down to that hourly chart, because now I'm going to notice hourly chart. There we are. That after opening up and we were up about 50, we're now down 9, 4, 5, 9. We've slid back down. Now we're sliding back up. So we're going to see this tug of war back and forth where they just literally will throw those orders into the market. First of all, we trade on right now a $1 to $2 to sometimes $3 wide market between bid and offer in the NASDAQ, and they trade on it. So it gets to be pretty wild, and it can be very comical as well. But you know, when they come in and they're just pushing buy at the market button, you get what you get. Now, where are we? What can I look for, or what can we expect? Now, first thing I want to actually point out a little bit here is when we're dealing in trend, this was a counter trend move. It was not bullish. It was counter trend. Parts of it were like, oh my God, look what they're doing. Absolutely kick butt rally. But it was counter trend. The trend was down. So it was just part of a larger 3-wave structure up. In fact, it was the C wave. This all amounted to the A wave, that was the B wave, and that was the C wave. And the A wave was Chop City, but it was a bunch of ABC, 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 and all corrective, all counter trend moves. So each time we drop back into trend, the market moves, and it's very clear. So the point is that as you're stepping into trade, that's where you're getting your clues from. That's where you're getting your direction from. Now, early in the day, again, like tomorrow morning, as a day trader, I am going to try and work and see where the market, where and how it will develop trend. Now, that does not mean that the trend for an hour or two could be up. I need to see it develop trend. But here is what I'm balancing all that against: my wave count. And then I will put the Fibonacci in. So we're going to do this step by step. And I basically want to take today so that I'm sharing with you how I look at it, and then how that follow through actually does come through. So when you worked with Elliott long enough and you can build confidence in your count that you're using, and then that also will add confidence to the through all of the movements, but it'll build confidence in the Fibonacci. So when you've got the Fibonacci support, you've got the moving averages, and you've got an Elliott count, you have a pretty good roadmap on how and where you should get into trades. And as you complete, even on a small time frame, even when I'm using my 30-second charts and my 1-minute charts and moving through those, it still follows through and in Elliott basis, it adheres to Fibonacci, and the moving averages continue to work. So here we are. We came out Friday. The market had resumed trend. So the trend is down. The trend confirmed down back in December, November, December, when it finished putting 5 waves down off of what I am still considering all-time highs for right now. It's going to take a long time, I believe, before those highs are again broken in terms of that it being an impulse and a bullish move, a longer-term bullish run. There's still more to come, but we need to correct a whole bunch of stuff. So having said that, from here, I continue to look for trend to be down. Now, what that tells me is that the downside moves are going to be impulse waves. They're going to be a 5-wave structure moving down, followed by the corrective waves being counter trend. They will be ABC. There'll be 3 waves. So as long as I can see 5 down, 3 up, 5 down, 3 up, we can assess and say the trend remains down. The trend is down. That's not bad. That's giving us a plethora of information so that we can determine how we want to trade it. If you're an options trader, again, you likely have started to see that shift where the premium is shifting from the calls over to the puts. And when you start to see that, so that an equidistant, so you've got your at the money line, you've got equidistant puts, out of the money puts and out of the money calls. And you can see where the premium is. When that premium starts to shift, well, the market's letting you know that it is finding that there's more risk when it shifts to the puts, there's more risk to the downside. That will be the market's perception. There's more risk to the downside. So market makers want more, quote unquote, insurance in order to sell you that put. And when it's the other way around, in order for you're all going to come running in to buy the calls, well, if you're a market maker and you're selling those calls, you're going to want insurance there. So that's what's called premium. Now, back to how we want to interpret this. It continues to build to the downside now. And so we're continuing. Before we rally back up, we were down, and we rallied back up to 4. Now the sellers move back in. So what does that tell us? So what are we looking for next to give us additional confirmation? Well, we had figured out, and I'm going to put it all back in. So sorry, I keep switching back and forth. Let's go back out, and I'm going to first put back up the intermediate wave 3. Actually, I'm not going to do that. I'll do that last. What I really want to do is I want to put up for minute 3. That's the most important because that's what we're dropping in now. So how do I come about? I'm going to use Fibonacci extensions. So the difference between retracements and extensions is the retracements are exactly that. If I'm just looking for a wave 2, I'm just going to run the retracements for wave 1 that'll give me the resistance levels for wave 2. When we're done with 3, I'll run retracement so I can get an idea of where wave 4 should come to. But now I'm looking for extensions. So what's going to be the first extension? Well, I've got wave 1, and I got 2. I got wave 3. So I now want to run extensions and look at the Fibonacci relationship between wave 3 and wave 1, because that's all I've got right now. So working with what we know to what we are going to be getting. So I'm going to put that in. And that will go from here to there, and then back up to there. And so here we are. First of all, our first real support comes in at 12,623. That's the Fibonacci support, the Fibonacci 0.382. But a minute third wave to only be 0.382 of that first wave? No. It's there because this is how I've got the extensions set up. So it is going to be support because it's a Fibonacci sequence, it's a Fibonacci number. The market should find support. Do I think that it's going to turn and rally a whole bunch? No, I do not. There's no significant importance in terms of it concluding this minute third wave. What it can do is if we're doing another 1, 2, 3, 4, 5 down, and we get down to there, and I can count the 5, well, it's not going to be all of minute 3. It's going to be sub-minute 1 of minute 3. It'll just suggest to me that the market is continuing to subdivide. Again, this is a large intermediate degree third wave, and it is now telling us pretty clearly, I intend to be the longest and the strongest out of waves 1, 3, and 5 of this larger intermediate degree impulse down. And again, saying, I intend to be, this is the market talking, I intend to be the largest, the longest, and the strongest out of the 5-wave sequence on the minor degree, of which we have minor 1 and 2, right? Inside intermediate wave 3, what do we got? 5 waves of minor degree. Inside minor wave 3, what do we have? 5 waves of minute degree. Inside minute 3, what do we have? 5 waves of sub-minute degree. So this could be just clicking down, get us here, and it's only sub-minute wave 1. Then we run the process again. We do a little pullback or counter trend rally. It comes in the 3 waves, and then we put a 2, and then we get the most severe section of the drop. Now, it doesn't necessarily, this could turn into the most severe section of the drop for us. This could be sub-minute 1, sub-minute 2, and now we are in that third. And if that's the case, we're breaking. We will break. That's what we now know, because understanding the characteristics of that third wave, we're now getting an idea. Now we know. So if we come in only here and we're done and we can do 5 and we rally, it's not the end of the wave. It's not a turn in the market. Yeah, it's a turn in the market, but it's going to be very short-lived. It's a point where the sellers have kind of exhausted themselves for the moment. The buyers look both ways. They start to come in and move the market for whatever the reason is. It could be, just profit taking. You were short, you're going to come in, I'll take my profit and sit it out, see where we go from here, et cetera, et cetera. The options continue to trade. There could be a lot of things that'll come in, and that forces and pushes the buyers and sellers, pushes the options around, and that creates a difference to where the market will go. Whether you're going to be buying or selling the stock, buying or selling the index, et cetera, et cetera. So here we sit. So again, now let's just go over what do I expect on an Elliott basis and a Fibonacci basis coming off in this third wave. Well, the first thing that I'm going to expect, and we're now getting very close, is that I am expecting the market to drop below 12,801. That's the low of minute wave 1. Minute wave 3 will definitively break that. It has to, or it's not the third wave. Okay, so I don't have any reason not to expect it. So I expect the market to break 12,801. I expect it to come down and take a look and a pause at 12,623 in that zone, in a little bit of a zone there. But if it comes flying down and breaks through that, then it's heading for 12,337. Again, next level down. These are support levels. When they're broken, we're giving free rein for the market to go to that next level. And when I can go out right now, it's not going to happen because all of our moving averages are basically telling us we're going down. They're all pointing down. I'm going to go out to the weekly. I think I'm going to get the same picture. Nope. Finally, we find one. The weekly 200 moving average is at 11,697. I fully would expect that those are going to break. I would assume that they're going to break. So what do we look for quicker? That would be all the way down. Now we're going to move back to that hourly chart. I'm going to open this up so we can take a peek. So here, beautiful, ABC. By the way, this was a beautiful falling 3 pattern. It happened within the hour, but it gave you every reason. This They bought it up. That was fine. But then on the breaks, they break point here, then a break point there, and a break point here. And then the major break point was when it broke the 20, then it broke the 50. That was like, just sell. If you're an option trader, you're looking to buy puts. You're selling the calls. If you're an index trader, you are selling the future. And now you're just going to, what your next steps are. We had support levels all the way on, and they continued to meet them and go through them. Now, granted, not everything doesn't go straight down, although it looks like it here. You go down and you bounce, you go down, you bounce, you go down, you bounce. On whatever time frame now, when I'm trading, I'm using a 1 minute or a 30-second. So let's just say a 1 minute, a 2 minute, and a 5 minute chart. But the chart I'm really trading off to is a 1 minute. It continues to follow Elliott. It continues to follow Fibonacci. It continues to follow the moving averages. All of the indicators, everything that I'm using on an hourly and a daily chart, continue to work and function just as well on these small time frames. And why? Because Elliott wave is a series of building blocks. That's the whole premise of this principle, of the theory, is that the market builds in recognizable patterns and then in degrees. So when you're looking at a weekly chart, that's a much longer term pattern that will take much longer to unfold, etc. So if I'm working on a 1 minute chart or a 30-second chart, the picture can change every minute or 30 seconds. And often, friends, it does. So again, mindset, building things together here of what you think the market's going to do. How do I want to trade it? Where do I want to get in? So now we're still counting it down and we're beginning to head. But the market, again, we've got down to 12,806. That's close enough. That's close to that 12,801. It gives them pause because the sellers have got to be able to push through it and push through the buyers that are going to be standing there. So if the sellers' idea is to push it below because they want to trigger something else underneath or whatever the reason is, they have to have enough. The buyers would be there ready to buy because of the market. And so what we're looking for here is for it to break 12,800 and to just keep going. So where are we? On the way. We know they're going to take a pause there. We're also in an area where the rest of it's just the US. That's all. We just got us traders, us US traders. That's what comes in first when the Globex starts at 6 p.m. Eastern, 3 p.m. Pacific. It's the opportunity for traders and big firms. They come back online and they start making their adjustments as to how they came out of expiration on Friday. What do they need to do? As you can see, the stocks themselves don't start trading until much later in the Globex session. So right now, it's just you have to balance it against going in and doing something in the future. So that's what we see. So in any case, what we got going on is a continuation of this minute wave 3. Now, again, back on this hourly chart, we've got that support there. We have support at 12,623. I do expect all of them to be broken. I think by the time we get back around to the US tomorrow morning in our opening, I do feel that we may run up because there's a lot of preconceived and pre-scheduled orders. So it's not just us that we've had the opportunity to come in this afternoon. Option traders, and that's where your position sits and only sits, you won't get that opportunity until tomorrow morning, and then you make your adjustments there. Now you can see they jump right back in and they start buying it back up. You can see we were down at 12,006. We've just rallied up 27 points. It's the product of the market, and it's thin by thin. So all of this is just plain trading. So for tomorrow, I do suspect, now that we're in the third of the third of the third, We should be more consistently going down. Yes, we can continue to subdivide, and yes, it may happen. Cannot be ruled out. But from this level, I am pretty comfortable in putting that minute 2 here. The 200, the hourly 200 moving average held nicely. Going up, touched it, and that's as far as it got. And I thought, okay, they might try it again on Friday. They didn't get very close. It was 50 points more above it. For a minute, I thought, that's where they want to go. Got caught, boom, smack. In came the sellers. So what we have, all of our moving averages are turning lower. The 200, once things really get going, it'll turn and it'll start to go down. Upside should be limited. We should be limited to small bounces until we get at least below 12,801. If anything, I'm going to tell you what it could be is 1, 2, 3, a little 4, and then we come down into 5. Very small, but hey, it could be the ticket. I'm going to run it down very quickly to this 15-minute so we can take a look. Here we are. 1, 2, 1, 2, 3, 4, 5 of 3, a little bounce, and another lower, and that's the completion of maybe this first sequence down, and then we get another rally, and then we keep going. That's the nature of how markets trade. The ebb and the flow. Recognizing that we're in the third tells you that that flow is going to be a little bit harder in this case because the trend is down. That flow is going to be harder to the downside. It's going to go. When we're in a bullish pattern where the trend is up, you'd expect the same thing, but the wave 3 going up will be the most powerful and strongest. They still carry the same characteristics, but according to trend, will tell you, of course, what direction it goes. Okay, so down is where we have it. Now, what I would continue to suggest is that depending on what you're trading and what your frame is, if you're a swing trader, a day trader, a position trader, a swing day trader, or et cetera, your positions can be built accordingly. But as a day trader, I would look to trade all of it, upside and downside. But you're going to put together that in terms of what we are expecting. If I'm expecting the trend is down and it looks like we're dropping in the third, the larger moves, the larger, quicker drops, I've already now they can see. Now they turned it right around and pushed it right up. Well, that fits very cleanly to what we were just talking about. They put together a little bounce. Yeah, it is tradable. If you're a day trader, it's very tradable. So you really have to put all that together when you're trading. And again, and I'm telling you, where I do it on these charts. This is right from when they first opened. I was like, okay, I'll play. But you can see now that everybody's, oh, look how bullish it is. It's like, it truly isn't when you pull it out. There it is in the 5-minute, zippity-doo-dah. But the market will move, and it's going to do it in 3 waves. Here's the A, here's the B, 1, 2, 3, 4, 5, maybe. And then we will go down again. So the ebb and flow is all very natural. Now, what do we need to be thinking? Stay in tune with the trend. Don't fight the trend. If the market's going to turn and kick butt and go up, don't fight it. Even though in my mind, I'm saying, I still expect this thing to break 12,800. Well, but it's trading at 62. They're pushing. They're pushing. And if I'm thinking that, and I decided to short it at 35, I got 25 NASDAQ points against me on a 1 lot. On a 1 lot. That's a lot of money. it could really take down your account. So again, depending on your account size, depending on how many contracts you're doing, can cost a lot of money. So you want to trade with the market. If they're going to be quick, it's a day trade for sure. If you're a position trader and you've got options, you're fine. And if you're a position trader in futures and you're using the future and your pockets are a little bit deeper, you're fine. You add. The expectations haven't changed. I will tell you where I think it would break and then suggest that it's not going to go and break 12,800. That you can figure out. But before I make this entire update, the length of the session, let's just kind of quickly review for tomorrow. Big picture, we're going down. So I do want to add one more layer. Oh, no, I don't. I didn't really finish and tell you where I thought ultimately this is going to go. So when we look at this, a minor third wave against what the first wave did, we'd be looking for 1.618. That's at 96.26. But again, if I go all the way back out, I'm only thinking that this intermediate third wave is going to get to 9,000. Could it? Sure. It really could. Minor, the minute comes down, comes back up, we get the 4 and the 5. And if the 5 ends down here and that puts the minor third wave down about 94, then we get a 4 and a 5, and that fifth in the minor, which will complete the intermediate, could very cleanly end up at 9,000. So yes, that is in play. So's that, so's that, so's that. At a minimum for wave 3, I think it should equal minute wave 1 at a minimum. And that puts the pressure on wave 5. So at a minimum, 11,125. I think it goes further. So we're looking at 10,552 all the way down to 96.26. That would be just a complete minute 3. And actually, we're up here in inside that minute 3. So these are sub-minute moves. So once this gets itself cleaned up a little bit, then again, I've got another point to draw in. This is for the minute 3. Well, if this is only going to be sub-minute 1 and sub-minute 2, then I can put in another reading. And then we're going to be checking to see where they overlap and where we get resistance and levels that overlap. And that gives additional support to that level coming into play. So that would be where I expect the minute 3 to come in, down in here. But we're in the sub. We have 5 waves of sub-minute degree to get in. So possibly down to 12,623. Then that'll just finish sub-minute wave 1. Then we do a rally. Then we come down in the 3rd. Then we do a rally in the 4th, and we come down in that 5th. And then we're going to be finishing that minute 3rd anywhere down in here, from here down to here. And then again, another 4th wave at a minute degree, a minute 5, and now we're finishing minor 3, which again should likely complete down in here. Then we get a minor wave 4 and a minor 5th wave down, and that's the one where I am looking for it to come down to 9,077. I'm into that area. So lots of downside still to come. We'll track it, we'll work it, we'll trade it. Continue to follow your moving averages. They're now pretty much lined up. But when you're using the very near term, like the 5-minute, you can see how your 4 and your 8 and even your 20 come back into play. So we can't, now they're all the way up to 91. So you can see how they took it down to 55, and now they're running it up to 40. It just the way the markets trade. It's very wide. If somebody comes in, they got a number to buy, you get a lot of the early guys that are short cover, et cetera, et cetera. It does not suggest anything other than the ebb and flow of the market. Market continues to consolidate. People continue to come in and make their, their mark. And I wouldn't put a lot of weight in it, but on a 5-minute chart, you cannot discount that the possibility can go up to 12,937. That's where the 50 is. That's where it could do. And then again, drop from there. And I'm still looking for 12,800 to be broken. Okay, I'm going to leave it there. I've put out a lot of information. Continue to use the moving averages, the Elliott and the Fibonacci, to give you extra support and resistance and where the break points are when you've got a break of your larger moving averages, the 50, the 20, the 200, and they're all grouped together like this 5-minute was, all the way up here on Friday morning, and it broke all of them. Wow. That was the clean, like, oh my God, just get me short, because this is what it did. But it told you. It told you. It broke through all of them. And so that just produces a very, very strong downside move. Okay, this is where I'm going to keep it. That's where I'm going to leave it. And our next update will be on Monday, May 2nd.